how are the French elections to be interpreted as a signal in the ongoing Euro discussion, and what do they mean for investors? To talk about this and other questions, it is my pleasure to introduce Mr. Stefan Keitel. He is the Chief Investment Officer of Credit Suisse. Stefan, France has been to the polls. Most observers point to a Hollande victory in the runoff as the most likely scenario. What does this mean in the ongoing Euro discussions?
Clearly a topic being of big interest for more or less all market participants because people have some fears that maybe the socialist Hollande could be rather destabilizing for the whole discussion we have in the Eurozone. And they are pretty much aware of the fact that he is rather not so much positive on all these measures which have been put in place so far from the Eurozone responsibles. And he also made that clear call that he rather would expect more responsibility of the ECB. And there are also some parallels that market participants refer to what happened as François Mitterrand took over responsibility at the beginning of the 80s. The capital markets reacted sharply. Equity markets in France down roughly 30%. A yield pickup in the 10-year space in France, roughly 2.5 to 3%. A strong devaluation of the French franc. So, of course, a sharp reaction of the capital markets. But we think this time it will be definitely different because it's anything but a surprise that Hollande now is the favorite for the upcoming elections, because all the polls in the past have clearly shown that he is the candidate with a pretty high probability for being successful at the end of the day. So that's a big, big difference. And there are, of course, contracts already in place. It's not so easy to get rid of them. And we also see that the understanding of Hollande himself is also being a part of the Eurozone crisis management.
In this space before, you've talked of the balancing act necessary for European policymakers between austerity and growth support. Where are the risks in that whole area right now?
Of course, we should not underestimate that in particular over the next 1 to 3 weeks, we are confronted with a huge bulk of so-called event risks. We have, again, the polls in France, we will have the polls in Greece. We had that resignation of the Dutch government, and of course now a following up discussion what will happen with the AAA rating there. So much discussion points for the very short term, and also the normal topics. I think all these structural problems in Spain and then these strong refinancing needs in Italy we will be confronted with over the whole year 2012. But when we look into the markets, despite the fact that we had all these renewed discussions, the markets, despite that consolidation, moderate correction phase, is rather stable. And we have clear indications that we have visible improvements from an overall point of view. All these liquidity measures the ECB in particular set in place over the last weeks and months now show a kind of positive impact, and not only general relief at the capital markets. Let's, for example, have a look at the French and the German banks. They are not so much impacted anymore with what happens in the Eurozone periphery, because now more the local banks are owners of the local debt. And so the probability of these nasty spillover effects is pretty much and visible lower compared to the situation we had been confronted with over the last months and years. So steps in the right direction had been made, and we think if there is a scenario further deteriorating, that then also the ECB again is able to take some additional dry powder and to react and to step into the markets and to appear at the markets with further stimulating measures.
You said it yourself, we are in a consolidation or in a correction phase on the equity side. Are you already thinking of re-entering the market?
Yes, we are definitely in discussions about this, but given the event risks I just referred to, I think we think now it's still not the right moment to go for it, but we are on a preparation level. We think that it was a rather healthy consolidation correction which took place so far, with a renewed focus on growth fears, on geopolitical fears, and of course the discussed Eurozone fears. But the overall picture, the overall framework from our point of view is rather healthy. Reasonable growth in the core markets, strong liquidity support out of the central banks, in particular particular the US Fed and the ECB, strong corporate balance sheets. There's a strong necessity for investors across the world, across the board, to think about reallocation, more towards real assets and less focus on the so-called nominal assets. So we think the current consolidation and correction phase is rather a buying opportunity. Maybe this time it's not sell in May and go away. Maybe this time it's rather buy in May and stay.
Stefan, thank you very much for these views. And thank you for your interest. If you have any question on what you have just seen or on Credit Suisse in general, we look forward to your message. Stay tuned for next time, and thank you very much.